Good morning, everybody. Want to do a little breakdown of a position that I took this morning and just a review on price action in general this morning. The first thing off, let's start off with a daily. We have a gap here, extend that gap. We also have a daily fair value gap sitting there. Pull that through, and we have a new week opening gap sitting there. Let's change the color of this for the sake of avoiding confusion. I have a new week opening gap sitting up here along with this gap here that I got annotated, as well as this little gap here that I also took a note of. We traded into this daily gap up here this morning when I sat down. Pre-market analysis, I saw that we traded into that gap. Yesterday's high is now taken as well. So that was what I saw here. So we're stuck between two higher. Let's just hit back here, back on NQ. If I switch this over to ES, it's not annotated here, but I have it on my screen. We have this inversion extended out. We have that. Hold on, go up to a daily. We have this gap sitting here. Just open it up here in front of me. We have this new week opening gap sitting up here. We traded into that yesterday. We have a daily balanced price range. Look at this gap here and that gap there. Pull that through, and you'll see that we are sitting inside of those two levels. So we're sitting inside of a consolidation between those two levels. That's something that I saw this morning, something that I took note of on my charts. So we're sitting on a higher time frame consolidation between those two levels. Looking back at NQ, same thing can be seen here. We have this daily gap, and we have this new week opening gap here. So those are the things that I noted this morning. Kept my focus on those levels. So working my way down, didn't need much else there. I still wanted to see, since we traded into this daily gap, I wanted to see something pushing us down lower. Since we were sitting inside of this daily fair value gap level as well, I wanted to see price push off lower, give me something lower. So bias for me was bearish this morning, looking for something lower. So I was just looking for a narrative to confirm that bias. Switching through time frames, not much was seen on a 4 hour. We took out this equal high. We took that out. That was something that I noted initially. Same thing seen on a 1 hour chart. We took out that high, yesterday's high on NQ. So that's something that I took a note of. Going down to a 15. There's that high Wednesday, yesterday's high. We took that out. right here. We took that out in London. So that's something I noted. By the way, if you look on your ES and Dow charts, you will see that they both failed to take out this high. So that's a SMT with the other averages, which also lines up with the whole idea that I wanted to see something bearish this morning. Also saw this order block here coming right off of that high. We tapped into that level, pulled away from it, took a note of this 15-minute inversion. Also took a note of this 15-minute fair value gap below us, as well as this one here. I also took a note of that one. Then I had a 1 hour old low sitting right there for low hanging fruit as a target. 15-minute equal lows here, relative equal lows. And to me, this 15-minute relative equal low was that to me confirmed my narrative. I didn't really see any reason for price to go back up here again. Since we took this high, no clean levels up here. We took that high. We had this order block. We respected that, rallied away from that down lower. So my eyes jumped to these lows here. We just head over to the ES real quick. When I was on ES, same thing seen on 15-minute time frame. I saw these relative equal lows here, and to me that was a clean, clear level. And so that's the level that I wanted to see over there as far as price trading into that. We can note here this high, Wednesday's high, sitting up there. We did not trade back above that high, so that is a SMT with NQ. The same thing can be seen on Nasdaq. So I wanted to see price reach for this relative equal low, and as a low hanging fruit target, I just had this low sitting down here, as well as I had this fair value gap as well initially sitting down there if price didn't trade into that, but we did trade into that pre-market already before pre-market. We traded down, traded into that, filled that area. We traded up into that 15-minute inversion. Just pull these levels back, pull them back so we can see what's going on here. So we were expecting a 8:30 advanced GDP on the calendar. So we're bearish. Narrative is looking for price to reach down to those relative equal lows. So I am 100% short. Nothing in price was shouting that we wanted to see a buy. So I was short here looking for a position to get short. Pre-market price traded into this 15-minute inversion. See, we tap that mean threshold. We trade down below that. Notice here, this down candle, we have high, low, higher, high. This is a breaker block. Pull that through. Price trades back into that, 819. Now, 819 is 1 minute before the macro, so I didn't participate in that move. And then we also have this high, low, higher, high structure here. So this is a breaker block as well, which price traded back into this one down here, 821. Didn't take that one because I wanted to see price trade back up into this one. It's like a fair value gap where ICT explains that if you have two fair value gaps and you take the entry on the lower fair value gap, then you have to expect price to trade back up into that higher fair value gap. So you need to accommodate that higher fair value gap in the stop as well. So that's how you approach if you have two PD arrays that could give you a potential entry. So I wanted to see the higher one. I was waiting for 8:30 for that GDP to come out. See if they want to go back, want to tap this higher breaker block. Now sitting through that, I noticed price was in a high resistance liquidity run condition since we didn't really move. We filled all the gaps. No gaps were left open. We didn't get any breakaway gaps. So I was sitting looking at this. We have the breaker block. We have an order block. We have this breaker block. And we also have price trading into a higher time frame 15-minute inversion. So we have 3 PD arrays sitting in this area. So a stop would essentially be above that order block. That's where I was planning to put the stop. For a take profit, I was looking at these lows here. Okay, that's all I need. Looking at those lows, it's a low hanging fruit target. Simple enough. So let's switch over to NQ over here because price on US 100 here isn't as clean, isn't the same as NQ over here, which we had this wick. So all right. So here you go. There's your breaker block. There's your second breaker block. Here is your short position. Now, looking at this here, you can see this is a high resistance run. Price was tapping into this. Price was tapping into the mean threshold of this 15-minute fair value gap. Okay, so that's what I saw. That's what I noted. Back to NQ. So 829. Okay, I knew this was a high resistance liquidity run. I am expecting bearish prices. Narrative is price reaching for those equal lows on a 15-minute. So I was 100% bullish. Bearish, not bullish. Nothing here shouted to me that price was gonna want to trade up higher. The narrative was bearish. So 829, I took an entry. We traded back into that lower breaker block. I said, okay, fine. Trades back into the lower breaker block. Stop isn't massive. We had a 0.05% stop. So not a bad stop. So I said, okay, I'm going to get in. My take profit's going to be below, at least below this low, below that low if it wants to go below that low. So I got in at this price point, placed the stop slightly. Yeah, my stop was here. Stop was right there above that high. Stop was there. I wanted to pull the stop down. Brokerage, it didn't want to pull down. News embargo was going to lift in less than a minute. So I didn't want to fuff with that. Tried fuffing with it. Didn't want to move anyway. And right before I was able to place my buy limit, the news embargo lifted and price opened up, traded down, and started coming back up and then into a negative and ended up hitting my buy stop. Wanted to close it out manual, it just was not able to do so since price was this was super fast. It was like click, 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 real fast. So it didn't give me time to do that either. So I ended up hitting the stop. Didn't get the time to put that buy limit in. Like I said, I was fuffing with that buy stop, trying to get that buy stop into that candle body, and then wanted to place a buy limit down here to get my 5 handles, 12%, 5 handles. And it didn't give me the time to do so. Ended up taking the stop. No big deal. High resistance liquidity run. Didn't anticipate very much of the position, but nonetheless followed most of my rules. The only thing that I can complain about here with this position is that we never got a nice, real clean impulse move below the breaker block. Okay, so breaker block, I wanted to see an impulse move down here. We did not get the impulse. Price was dribbling down slowly, came back higher, retested that breaker block there as well. So that's the only thing that I can complain about. Nothing else that I can complain about on this position. Let me quickly go over to, there we go, my brokerage. So this is the chart on Iron Beam, and I had the breaker blocks noted. Price traded up here, tested the level, sold it just barely below that breaker block, took that entry, and as soon as the news embargo lifted, price went down below those lows. Just didn't get a time to place a buy limit in there. It's just one of those things, and yeah. So in general, as far as price action in general, so far we have really been sitting inside of this consolidation on a daily. Price has been super, super messy. Nothing that you really want to be a part of. Look at this here. Just this week alone here, it's honestly been messy. Monday, messy. Tuesday, messy. Wednesday was pretty messy. And so far today seems to be following suit with that idea. Not that you can't trade that, but it's just more difficult to trade in these types of conditions. I'm going to go ahead and take this off. Now, yesterday, let's look at Wednesday. Yeah, Wednesday morning, right around here, 9:30 market open. Same thing, basically, as what happened this morning, and and that's the reason I opted to take this morning's position as well. Is we had this breaker block, high, low, higher, high, price traded through. Second breaker block would be here. Came back into that one. Notice we have a nice displacement below the breaker block here. Traded down below the second breaker block as well here. Price came back into that, rallied off. You would be my target would be the low. Short position. See, there you go. That's more than enough for me to grab 5 handles, 12% out of that position. And the stop, in this case, even if you took the lower breaker block, the stop, you would have a breaker block here, order block, and you have a inversion as well as fair gap here. So this would be a unicorn model if price came back into this. It didn't. If price gives you two breaker blocks, you're just gonna have to go with the lower one, unless you really want to just stick with a higher one, then there's just going to be a possibility that you will miss some setups where price is going to trade that second breaker block, rally perfectly, and you're just not going to be a part of that. And that's something that you just will have to accept if you want to take uh, setups where price trades back up into that upper portion, that upper breaker block. So price traded that 930, tanked down lower, and the target was traded. So easy enough. Here you go. 5 handles, done and dusted in that one. Only reason I was not part of this move was simply because of FOMC, and the AM session of FOMC tends to be more difficult, high resistance liquidity runs conditions. So I opt to not trade AM session of FOMC morning, expecting bad price action. Like ICT says, he just does not trade AM session of FOMC. So sometimes it's gonna be cleaner, like it was here. Gave that had that one setup at market open, and then it ended up just chopping. Look at this. After that, look at that, just chopped. Okay, so here we can see would have been better to avoid this, as after the fact you had a bunch of chop. So that's following the rules. Following the rules more times than not, it will be a choppy day. So we are heading into February. We should start seeing price action in general clean up, and the market should start getting ready to start moving a bit on higher time frames, especially seasonal tendencies. We expect a bullish run February. We expect a bullish run. So expect to see prices start to clean up, and on DXY that would be the same thing where we would expect DXY to give us a rally and then go into more of a consolidation for the month. So expect to see prices start to come alive February, and so far January has been choppy. We're sitting inside that daily consolidation, so it's expected. So even though we had consolidation, there were some sessions where price started cleaning up, and we got a couple of decent runs in the last 2 weeks. Although nothing that was clean enough for me to participate in. Nothing I was going to be willing to put money on that was clean enough that was clear enough as far as having a bias as well as a narrative attached to the idea. Most of the time we were stuck inside this consolidation on a daily, and even though if you had a privilege gap, you traded that privilege gap, traded down on a daily, specifically on a daily on NAS. This daily fair value gap here, Tuesday, we traded down into that, rallied away from that, and had this really nice move up. There was not a breaker block for me to get participate in that move. 28th Jan, 28th of Jan. There was not a breaker block for me to participate in that move. We go back here. See, there we go. We hit that daily fair value gap. And we have low, high, lower, low trading into that fair value gap. We have an order block sitting right here. We trade into the order block, but no trade back into this breaker block. And in this case, yes, you have low, high, and lower, low structure. You traded above that. Yes, displacement. Well, look at that. That's not clean. That is a mess. Okay, not something that I would be willing to participate in, even though you could take the wick and the candle body, pull it through. Yes, it's a breaker block. It's not clean enough. It's so I don't want to participate in that. It's just not something I'm willing to participate in. Second reason, if I take that, I got a fair value gap sitting right here. That fair value gap, and yes, this would act as a propulsion block if price got back to that. So I would be able to place a stop here. So we have a break block, fair value gap, propulsion block. Stop is 21%. Okay. So that does not fit my model where I'm looking for 5 handles. So that risk does not fit my model. Number one reason, this is high resistance. Okay. High resistance run moving up. Yes. Even though it did move a lot as far as the points that it moved, it was messy. And I'm just not willing to participate in that. I'll sit on the sidelines, wait until my model presents itself, wait until it's clean, wait until I have a clean direction, clear direction on price, and I would participate in that. I mean, here on a daily time frame, we trade into this, so we would expect a bullish run off of that daily fair value gap. Target would be these relative equal highs sitting above price here. Okay, relative equal highs, fair value gap. That would be what you would be looking at. So the narrative would align with the daily bias. You There's no way you would have been able to argue that short price just was not clean. So I was just not willing to take that position. Anyway, back to the point. Prices are starting to clean up, but we are still inside of a messy bit of price action from December. So we still need to give that time for price to wake up and start moving and gyrating. But so far, it does look like things are starting to clean up a little bit more, and price does move when price shows you the signs that it is going to move. So that's going to cover it for this video. Hopefully, you have found this insightful and useful. And until we speak again, stay safe.